The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters here. It is Marvelous Monday, and on Marvelous Monday, well, lately, Tom is out buying real estate, folks, and that is a beautiful thing. In fact, if you have not had a chance to go check out the Tom's special report, the white paper, the bull market in Florida housing, go ahead and download that if you have an interest in maybe putting some of your longer term, well, any capital to work, but certainly, you know, if you take a look at your retirement funds out there that are just sitting in a basket and you're looking to diversify, see if you meet the needs as a qualified investor, go over to the homepage of TFNN.com, either download the special report, the white paper, or go over on the right-hand side, and you'll see a link there for the Tiger Real Estate Opportunity Fund. Go ahead and you can get they'll take you to the website. You can get in touch with Kathleen at TFNN.com as well. Get all the information that you need out there. So Tom is out buying real estate this morning. That is a beautiful thing. Let's go take a look at these markets. Hope everybody out there had a fantastic weekend. Right now you've got the Dow up 11 points, the S&P flat up a point here. You've got the composite up 8, Russell 2000 flat up 60 cents right now. New York Stock Exchange up 15 points, the NDX up $10, primarily driven by Apple. Let's go take a look at some of these charts. Now, in the morning when I kick off the shows, I'm always taking a look at the futures charts here. Let's go take a look at the cash S&P. So we're going to do really the same setup out here. Let's take a look at the cash S&P. We're going to take a look at Friday's action where it broke the trend line coming off of the June 4th lows. The low out there in the cash S&P, 1266.74. That's your first touch point. Your second set of touch points going to be the July 25th low as well as the July 24th low. You can see that area was just slightly penetrated on the week of October the 12th out there. It didn't last long. You got right back up inside the range. That set the S&P up to go test the swing point highs. The swing point highs from September 14th. That low was 1460. That was tested most recently here on Thursday last week when it got up to a high of 1464. Friday, came crushing through it. Now that you're through it, the logical thing here when you break a trend line is for the market to go back up and test that. That's exactly what the S&P here is trying to do. You can see it's up at its session highs here, 1435. You have to expect a bounce. Why? Number one, some of these indexes are a bit oversold out here. You also had a trend reading of 2.5 at Friday's close. That's on the New York Stock Exchange. Any trend readings above 2 typically result in a bounce. You hear me? A bounce. Not necessarily the next bullish move, but a bounce over the course of the next day or so. And really that's what we've got going on here today. And you would expect that after having a little bit of a rest in the marketplace out there. So watch the S&P. Watch if it comes up into this area here and rejects it. If it gets back in there, well, then the bounce could take it all the way back up to the highs again. I would say where we take you to this time might be just simply the October 18th level. That would be 1452 in the S&P 500. Let's go take a look at the other indexes as well. Let's go take a look at the Dow, since that's the first one that I saw in the lower left-hand corner. So you have the Dow breaking its trend line as well. So now you're going to go back to the same June 4th level. You had the Dow trading out at 12,035. That next touch point being the low of July 24th, 12,521. You see how that area held. Breaking that area is significant, folks. Now, you break that area, what you're going to do is at least going to go up and test it. If it can get back up inside there, okay, that would be, a bullish sign out there. Right now, you also saw the Dow do is come down and to this morning here, test the horizontal resistance area. That line extending all the way back into the highs of March the 16th. The high there, 13,289. The low this morning, 13,299. Close enough for me with regard to horizontal resistance out there, or support out there, excuse me. And that was on the Dow. So if it really breaks that line as well, that would be saying something big time. Let's go take a look at the other indexes as well. Let's go take a look at the NDX. That's the next up on my lower left-hand corner. So now, if we take a look at that, you're going to see several lines out here. Let's take a look at and we'll go ahead and remove them, maybe one at a time. Let's take a look at the one coming off of the highs here. The highs being September 21st. You had the NDX up at a level of 28.78. The next touch point on this was October 5th. You can see how weak the move was as the market tried to move back up into there October 17th. Could not even come close to getting to that trend line. Let's go ahead and just simply get rid of that line. Now, you're taking a look at two other sets of lines out, or one set of lines. That's the red set of lines. That is your rising price channel. In a rising price channel, you are getting the most number of co-located opens and closes. So what I mean by that, specifically, if you go take a look at the low session on the 4th of July, you're going to see that the low there, and you're going to use the body of that candle. You're going to use the open of that candle. That's going to be 24.5897. You now have co-located opens and closes. A co-located close happens to be the July 12th area. That's where it gets down and closes at 25.45. Opens up the next session, a co-located open now, a little bit higher price, out at the 25.45 level. Then where is another touch point that you've got? You've got a close on the candle session of July 24th. That gives us, what, 4 touch points out here. You then have really at least another one, which is going to be your October 10th level, when it opens up at the 27.43 range. So, and they do the same along the top of it. So that was the rising price channel, really breaking through that area and breaking through it here with some conviction on October 18th. That was Thursday. Real conviction on the 19th. Now, if you take a look at it, so that was the rising price channel. Now take a look at the rising trend line here, and that is where the NDX is trading up into here right now. That's coming off of your June 4th low. Your next touch point being July 25th, out at the 25.35 mark. And trend lines here, you know, you don't have to. You're just using lows of candles out there. Let's go to our first caller. Let's go to Rick in British Columbia. Rick, how was your weekend?
Hey, really good, thank you.
That's good. You guys getting fall weather, winter weather? What's it like up there?
Yeah, we're starting to get a bit nippier now.
Are you? Okay. So like 30s and stuff like that, or?
Yeah, we turned metric there about 35 years ago. Yeah. But yeah, you're right. I still remember those.
So that would be 30 is what you guys would be at what? Celsius would be what?
Zero
is 30. 30.
Zero is 32.
32. Okay, yeah.
And for every 9 you drop in Fahrenheit, you drop 5.
Okay.
Drop 5, so it's 5 to 9 every ratio.
Is it? Okay.
And use 32 and 0 as your freezing points or thawing points or whatever you want to say.
Now, that's beautiful. So was it easy to make the conversion for you?
Well, I always like math, so for me it was, but it's just little things to remember, like, 16 kilometers equals 10 miles, so it's 16 to 10, so you always use that ratio every time you see a high number, you know?
Hey, what's the, on some of the highways up there, what's the maximum speed limit? Down here I think the highest speed limit is 70 miles per hour. You've got to do the math on that for me.
Well, we have a freeway going into Vancouver in the southern part of the province.
Okay.
And that's 110, which is about 70. Yeah.
It is, okay.
And in Alberta,
I didn't know, maybe up there I figured they just let you guys open it up and let loose.
Not really, because the roads aren't, especially like yesterday, I went to another community here, and ice on cement is on bridges.
Yes.
Yeah, there was a little bit of a bridge that almost part of a corner, like, you know what I mean? Like the guy lost it on there because winter tires. Everybody says, "Well, winter tires are great." But once you're on ice, it don't really matter if you got winter. It's the studs in the steel studs in the tires.
For sure.
You can have the worst tire around, but if you got studs in it, you can. That's better than any winter tire kind of thing, right? It only makes sense. Right?
Yeah. I don't know if you've ever, because I grew up in Detroit area, so I'm familiar.
Oh yeah.
I'm familiar with ice, and and especially as you're coming up over whether you're on a bridge or just maybe up over a high overpass or something like that, and just how quick, once you're on ice. Now, what I remember as a kid also, I think, experiencing, not necessarily paying attention to what was happening in front of me, but I did catch it early enough to slide over onto the grass median. I also learned that grass is as slick as ice.
Yeah, it can.
It is. So once you get on grass, don't be touching that your stop pedal, your brakes.
Yeah. Hey, the one stock I'm looking at right now, which might be a bellwether for the market, is IBM.
Yes.
And the reason is the earnings are come out, so all the bad news is out, right?
Yes, absolutely.
And it looks to me like we can get a rally to about 200. And on a daily, it's a false break from that low of, 3 or 4 days ago?
Yeah.
And that doesn't mean, I know you're looking for a bit of a bounce, and you're not sure if it's going to happen today, tomorrow, or, the next...
It should. I will tell you, when you get trend readings of, they're pretty good gauges. Now, it's not, for setting bottoms is a whole different thing. And Tom did a ticker and trend combination there. But when you get a trend reading of 2.5, I know it was up really higher that intraday, but that's where it closed at. You should get a one-day bounce. And it usually happens within 48 hours. Now, really should be today because of the ability for the market to rest. If it doesn't, it's done a good sign.
Yeah, but you see what I'm getting at with IBM, though, right? I put it on a 5-day hourly, for example.
Okay.
And it broke the $200 mark on lighter volume, and from what I can see. So I'm just looking for a little bounce into just under $200 is where if I bought it, I'm thinking of buying a little bit here and just blowing it out just under 200 and putting a stop underneath 190.
Yeah, well, that's certainly a play out there. When I'm going to look at a stock chart, I'll use a 30-minute versus a 60-minute just to get a better gauge of volume because you've got 6.5 hours of the market. So on most charting packages,
I put it on 15 minutes even, and it's a false break from 200.
No, cool. Yeah. So as long as I'm just saying, you said a 60-minute. I went ahead and put a 30-minute up on my screen, just simply so that the volume bars, you're paying attention to that.
No,
so
that does make a lot of sense.
I think it would be wonderful if IBM were actually able to bounce up to $203 and go up there and try to test that gap down.
Mm-hmm.
You're taking a look at maybe getting up to $200, but it is a real bellwether. I don't, when you take a look at, I'm going to try to pull this back here. So on the 30-minute chart, the set of swing points. If you would, stay with us through the break, and we'll take a look at it. I'm looking at the 30-minute chart coming back into, it looks like about the 12:30 time frame on the 4th of September. It has about 185,000 shares there. So right now, today, looks like that area is under attack with 369,000 shares. That's not too bullish. 877-927-6648. We get back, we're going to go dissect IBM with our man Rick from British Columbia.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow basically flat here, down 83 cents right now. S&P up 65 cents. The composite up 7. Russell 2000 totally flat out here. Let's go back up to British Columbia, to the Northwest, to our man Rick. We're taking a look at IBM, dissecting and bisecting. So right now it's trading below the swing point, from the August 30th out there, which that low was 193.18. So just slightly below there. That has only 2.7 million shares, and as IBM was coming down into it, got 9.2 million shares coming down into it. October, and on Friday, 6.6 million shares. Now, on the daily chart, it is nearing that oversold level. So, but you got to wait for some kind of bullish candle, in my opinion, before you would take any kind of action, because I just see momentum to the downside. And on the 30-minute chart, Rick, if I take a look at the 30-minute chart out here, the swing point volume is it's coming down in there. I'm looking at really, I think, September 4th and August 30th on the 30-minute chart out there, and I see volume kind of coming down into that area. Now that's the 30-minute chart is really oversold, but it's just kind of working itself off sideways, and no bullish candles yet have shown up on the 30-minute chart.
Okay.
So I just think you got to kind of be careful out there. Now, you were saying on the daily chart, were you looking at the daily, or was just you're looking at the 30-minute chart and seeing where it broke without volume?
It broke the high volume day was the earnings day, And then the next day, it broke it on lighter volume. And very often, it'll come back and retest that level. And, so we
earnings day being, what, October the 17th? October 17th? Okay. Yeah. So moving lower on lighter volume, that's what you were saying?
Yeah. Very often what happens is when you see a false break like that, it'll go and get tested at some point in time.
Yeah.
So now, if that were the case, the question is, okay, where's the buy? 192, 190?
Yeah.
You know what I mean?
Well, to me it would be pretty easy. What I would do is use I would go ahead down to an intraday chart, and I would say a 30-minute would be pretty good. And I would, especially with it being in these, oversold areas. I mean, so it's making you'd love to see a bullish candle, because I can identify where you would see just a quick little reversal here, but you got to wait for the bulls to really show up. And they just haven't given it that signal because it's losing its relative strength right now. Just simply taking a look at on a 30-minute chart. That's actually a positive sign. But now you've got to wait for the bulls to show up.
Exactly.
Give you some type of signal. And then I see what you're shooting for, most certainly, the 199 area, 200 area, something like that. All righty?
Yeah, you bet. Thanks a lot, eh?
Hey.
You have a good...
You bet. And thanks for calling. Always good to hear your voice.
You take care.
Okay. Let's continue taking a look at the markets out here, folks. Let's see, what do we have popping and dropping? You got Intuitive Surgical. I think they got kind of kiboshed here just recently. They're up $10 and change. You got Apple up $11. That is a short covering going on out there inside Apple. You got Cascade Corp up $10. Priceline up 10 as well. Netflix up 3.25. Peabody Energy up 3. You've got Open Table up $2 and change. That's a nasty-looking stock out there. Google down $8. Let's go take a look at Google, see what she is doing out here in the marketplace. GOOG is the ticker symbol. There we go. I've got the 5-minute chart. Let's go put the daily chart on out here for Google. That thing does not look very good. So on the daily chart of Google, continued where Google is now headed to. So it's made a 0.382 retracement. 0.618 is the next thing that's in play. That's in the 639-ish range. But let's just go ahead and get rid of those lines out here. The problem here with Google, as you take a look at it, is any swing point that I can find out here, folks, it's like what I call a real junior swing point out here. No real retracement, no real pullback where the bulls could come in here. And what this really says to me is Google wants to come all the way back down to the lows in July. That's going to get back into the 568 range or so. And it's at 675 right now. So if you are long Google, you got to really be careful out here, because in this case here, had one heck of a nice run up from those lows of July 12th out there. The only time that it had any volume on the way up there was when it broke out on July 20th. Did that with 6.4 million shares. So you had decent, pretty good, good volume there. But that had 7 million shares. On the way down the last couple of trading sessions, you've had 12 million and 11.5 million shares. But this run right up here, folks, there's nothing to really stop Google from going all the way down and testing the July 12th lows down at the 562 area. 877-927-6648. Totally flat market out there, with the exception of the composite, the index. We'll go take a look at that when we come right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. I'm your co-host, Steve Rhodes. Tom is out buying real estate this morning, and we got the Dow down 11 points, S&P's off 5. Composite up 7, Russell down 4, and I was mistaken. I said Intuitive Surgical. I thought that they had gotten kiboshed earlier. They didn't. We're going to go take a look at that stock chart in a moment. But second in line price-wise to the upside is Priceline, up $11 and change here. That's up 2% this morning. The only strength that we're seeing inside the marketplace is the NDX, so there's a concentration on a few stocks out here. So let's go take a look at it. Now, when we take a look at Priceline, it does have a confirmed A to B equals CD down all the way to the 523 level, trading right now at 572, trying to bounce a bit. So we know we've got a confirmed A to B equals CD down. I say confirmed because it took out its B point. The B point would be the low, let's see here, 604.65. 603.49 on June 4th, had 1 million shares. That was taken out with a gap down, real breakdown on August the 8th, 6.7 million shares. So it has not completed that A to B equals CD down. What it did do on its most recent bounce up here, made a little doji here on September 18th as it made its move higher. Had really a sideways bearish engulfing session on the 19th, but pretty small body out there. Made a really nice doji there on September 25th. That doji there you're taking a look at, that's probably one of Rick in British Columbia's favorite. A gravestone doji out there. You don't see him too often, but when you do, folks, they are bearish signs out there. You got that confirmation on that next session. That was the last high that was out there, September 25th. If Priceline can bounce from here, that's where it would be headed back to, is the 649, 631 level. If it gets back up there with less than 947,000 shares, then it will go ahead, or let's say it gets up there with around 947,000 shares. That would still suggest that it wants to give it up, because what it's really going against is the downdraft of 6.7 million shares. If it gets back up there on lighter than 947,000 shares, that would also be telling you to be very, very cautious. Actually, this would be a good possible setup here for a short candidate out here, and that is on that's on Priceline. Let's go take a look at Intuitive Surgical out here, ISRG. That is the third in line, up dollar-wise, up $10 and change. It's up about 2%. Now, Intuitive Surgical is today taking out a area of resistance, which was tested. That happens to be this down window, this down gap here. That was on July 19th. This gap's down. So that session on July 19th, about 500,000 shares, we're going to call it, gaps down with 1.5 million shares. I got up and tested this area with volume, did it with 1.6 million shares on the trading session of October 17th. I don't know if there was earnings that was out there, but, 1.7 million shares rejected that little gap down area, but only had 500,000 shares. And that was suggesting that it would be back up there to test it. Couldn't get up there on Thursday, but it did get up there on Friday. Gave you one of those exhaustive doji candles, but really not too bad when you consider that the marketplace was down so big. 673,000 on the way up there. Also testing the 499. Now you get a close above the 540.01, and the apparently this was taken to Ace Hardware, and that window now being fixed, and that no longer becomes an area of support or resistance out there. In this case here, not support, but I would want you to use it as support as well. Once that window is fixed, that's it. Ixnay, it's gone. Where would this run to? Well, the next swing point high out there is the July 3rd level, only 124,000 shares. The high out there is 569.95. That is where this would want to run to. But where it really wants to run to, this is Intuitive Surgical, is this high volume high out here. I mean, it's really not too shabby. There's a high volume high out from April the 18th. The high out there is 594.89, 1.4 million shares. Looks to me like that's really, once this window here is broken, you could almost play this. In fact, if Rick were listening, I would say you would play this versus IBM as a momentum trade out here, because your stop now could certainly be underneath today's close out there, because this at least has a high volume high. If there is going to be a bounce in the marketplace, this now taking out an area that was previously resistance. It was coming in there with volume, and this would be the better momentum play to take you up into the 594 range versus IBM. So there is a possible trade for you if you have a bullish outlook. That is on Intuitive Surgical out there. Let's go take a look at AutoZone. AutoZone number 2 on the way down, right behind Google, off $5 and change. AZO is the ticker symbol. So let's go see what AutoZone is doing. Gaps down this morning here. This thing really has been in a sideways range. Of course, let's get rid of these lines here. This thing has got some pretty big volume spike bars. So you've got the low, which was from June 27th out there. Well, it's not the low, but you have a low out there on June 27th where it gaps down with 2.1 million shares out there. And that seems to be an area of support, because you did have the equity move back down and test that level on September 14th, 1.4 million shares at 1.4 going against 2.1. later gets rejected. And let's just try a trend line here. Let me see what this looks like here on the trend. Wasn't very good. Give me a moment here to redraw this. My apologies. So this equity here, AutoZone, does break above that trend line. And really all it was doing was coming back up here and testing a swing point that had 319,000 shares, tested it with 600,000 shares, and then again with 254,000. So this thing is really just in a sideways box range, but what it is doing each time, it continues to make slightly lower lows and certainly is making, pretty much making lower highs out here. It is making lower highs. I won't even say pretty much. It is making lower highs out here. That is on AutoZone. And if we take a look at AutoZone, let's put this back on a longer-term chart. So let's put this on a weekly chart out here. And you can see that this really traveling in the sideways range. What is holding this in place? Where is the danger on AutoZone? So it's been a heck of a run out there, hasn't it, folks? Here's the danger on AutoZone. If this thing, I don't know when they release numbers, but if this thing ever did fall out of bed, the highest volume happens to be March 6, 2009, $157 out there. But still not, let's see here, no high volume high. It's holding its own out here, AutoZone. I would say if you were in this equity, you don't want to see it close below 350, 338. If you're short this equity, you would want to see it certainly close below 353, 38. Then where it will run to? It'll run back probably to the January 7th level of $273 and change. That's on AutoZone. Amazon. Let's go take a look at Amazon. That is next up here to the downside. AMZN is the ticker symbol. And go take a look at Microsoft because it's down 52 cents. I saw the first ad this weekend for their tablet and with the keyboard. I was fortunate enough to do fill in for Tom on one of the Fridays when David was doing the technology update, and that's when he was showing the keyboard, which is really cool. I think that keyboard that lays on the table is the little rubber keyboard. I think maybe acts as a cover. Was really, really a cool idea out there. So I believe that hits the markets on October 26th. So that should be this week. Maybe it's Friday or what have you. So looks pretty cool out there. But let's go take a look at Amazon. That is trading lower, breaking a swing point here. Let's see what it's doing. So you got a couple of things that Amazon is doing. So you got the October 15th swing point low, 238.51. You're below that. You were coming into it with 4.9 million shares. That had 2.9. So it stopped just before. Today it goes ahead and picks up. It's done 1.5 million shares, only an hour and 15 minutes into the trading session. What it's going to run into, it's going to need some more juice here. You're going to want to watch Amazon and see what it does when it comes down to try to repair its open window, its gap up. That is from the session of July 27th. So the low there is 224.50. The high of that candle is 238.34. You are inside it right now. That sets up that's what it wants to do, is get down there and test that level. If it tests the 224.50, it's down there on less than 11 million shares, and that's a likely outcome, that it'll get down there on less than 11 million shares. Of course, I don't know when their earnings release is. Maybe somebody in the den can look that up for me. I don't know when their earnings release is. But if it gets down there, test that level of 224.50 on less than 11 million shares, and you get a bullish candle signal out here, that could be, oh, that was weird. That could be the end of the move to the downside. This also has a pretty good level of, it's got a high volume bar out here when it last, just prior to that, had gapped up. That was on the 27th of October out there, of April, I apologize, April 27, 2012, 22 million shares there. So if we draw that line across, that also will be an area that is a nice little support level. And that is on Amazon.com. You can see here, when this did gap up, it did move down, but the bulls took charge here on the session of June the 5th out there. Let's go to Bill in Littleton, Colorado. Bill, thanks for calling. Thanks for calling. Thanks for holding.
Yeah.
Good
to talk to you.
Or thanks for calling me twice. How about that?
Yeah.
How was your weekend?
Pretty good. Pretty good. Nice weather around here this weekend. So.
Oh, good. And how'd the Broncos do this weekend?
They were off.
Oh, they were off this weekend.
Yeah.
They had a bye.
Had to
Okay.
take a breather.
Okay.
Yeah.
All right. So they're going to build up some energy just to come back. Who do they play next? Do you know?
New Orleans.
Oh, do they? Okay. Is it a home game or are they away?
Home game.
Okay. Good. All right.
It should be a tough game.
Yes, I would think so.
Yeah.
But they'll be rested. That'll be good.
Yeah.
You want to take a look at Dish Networks, I believe, right?
Yeah. So I kind of want to see how much more you think this can run.
Okay. So we're taking a look at that.
A family member has it, so
I'm sorry?
I have a family member that has it.
Oh, good. Now, do you use cable or satellite?
Satellite.
You do. Okay. What would you say is satellite pretty? Is that pretty popular out in Colorado?
Oh yeah, there's a lot of Dish and DirecTV both.
Okay. Yeah.
Of course, Dish has their headquarters out in Colorado.
Oh, they do. Okay. That's great.
Yeah.
Well, and then you get to pick up all of the NFL games, like the Thursday night game or what have you.
Yep.
As long as you
get them all.
As long as you get the premium channel. Okay, so we're going to take a look at Dish here, and so I'm going to put this on the weekly because there is a little gap down here with some pretty decent volume. Looks like that gap level. So the first place where you're going to get an answer to your question looks like it's going back to November 12, 2007. Looks like that high is 40.94. In fact, let me do this. Let me just move the chart over here so I can give you the exact price and make sure that's it. Okay, so you are looking at November 12, 2007. So you'll want to write this down here, $40.94. The volume out there is 15.5 million shares. If it gets up just over it, $40.95, closes below it on less than 15 million shares, that is a pretty decent signal to be very, very careful. What you would want to do is you'd want to go ahead and put a tight stop in place here. Now, the reason that you don't want to sell it or anything like that, you just want to go ahead and put a tight stop because it is an area that looks like it is not tested, and that is where it looks like it is headed to. It should be headed up there. Let me see what the bottom of that was, just out of curiosity, what the bottom of that candle. So the bottom of that, so here's where you're going to have to really start putting on the caution avalanche sign, is going to be 36.03. So 36.03, because that is the low of that session, to 40.94. So let's now pull this back and see what it's trading at. Let me go all the way back here. So it's trading at 36.36. Okay, so you're inside there. So you're inside that candle. And you did have a nice high-volume day on October 18th. So one of the things that they should do, if they are in this equity and have been in for a while, I would have my stop somewhere below the most recent gap up. That would be the October 10th date. So that level, the high is 32.44. What really should hold this in place if it were to pull back would be the $32.90 range. That is October the 11th out there. So I'm kind of giving you some parameters since it's friends and family that are in it, and I don't know what price they're in it, and if it's a longer-term holding that they might want to hold it. There are some areas that if it breaks that last gap up, that would not be a positive signal. Now I'm going to go ahead and put this on the weekly chart here for you. So let's put this on a weekly time frame. And when we do that, let me just refresh my screen, make sure I've got all the live volume out here. So when we do that on a weekly chart, it's also trading inside that November 23rd, 2007 level. That's got 39 million shares. So do you have any charts that will give you volume, Bill?
Yeah, I do.
Okay, so you're going to kind of be benchmarking the weekly volume as well. That's got 39 million shares because you're inside that swing point as well. And if this thing starts to, give up energy, you just got to make sure you're tightening your stop or use the parameters that I gave you on the daily chart out there. Does that help you?
Yeah. Yeah, I've got my weekly up right now, so
okay. If you want,
daily too.
Yeah, if you want, you can hold on through the break. We'll come back and take a look at Dish Networks with our man Bill from Littleton, Colorado. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show. Folks, we got the Dow down 11, S&P off 1. We're going to be going back out to Littleton, Colorado. Of course, I got an email during the break here from Barry, who was telling me that the highest speed limit is 85 miles per hour in Texas. That would be nice, because I usually travel at 15 over the speed limit. So that would be nice to be able to set it at 100 even Steven out there. Of course, you got to really be paying attention. Now, Barry, let's go back to Bill in Littleton. So I've got the monthly chart, the weekly chart, just to give you a couple things to be able to take a look at out here. And on the monthly chart here, I'm going to switch over to that here for a moment. What I did was I drew in the rising price channel that Dish Networks has been traveling in. So I went really all the way back to you could use the candle from March 9th. I just happened to start, it looks like here, on the April candle. And if your tools on your system allow you to draw channel lines, what you want to identify are the most number of co-located opens and closes out there. You want to have at least 3 or more in order to be able to make it a valid channel line. So I'm using low from April the 30th. That's at the 10. I'm using the open. I'm sorry, not the low. I'm using the open, 1093. The next area that I'm hitting, so a co-located close, if you would be August 31st when it closed out at 1794. Then the next month, obviously in September, opens up at the price of 1821. It's then going to hit the open on January 31st out at $19.74. Also happens on the downside to hit the low of December 31st, 2011, out at 24.40. So it's got a pretty well-established area of lows that have held out there. And so, again, not knowing how early whoever it is that has this equity, where they're in here, you'd want to understand what that rising price channel is, because what the price has done right now, it's up towards the upper end of that range, and we know that taking a look at the daily chart, the weekly chart, you could be experiencing some turbulence here. Not that it won't find some higher price, but it very well could, by the end of the month here in October, come right back into that level. And if it does come back below the upper trend line of that rising price channel, what that would be saying is that would be setting up a move back down to the bottom side. So you can draw that in on your chart. That is on the weekly for you. I'm going to switch. That's on the monthly. I'm going to switch over here to the weekly. Now, on the weekly, what this is also showing is noticing the swing point here that goes back on the weekly to May 23rd, 2008. Do you see that?
Yeah, I'm watching on TV here.
Okay.
Here.
Yep. So you got $36.11. It's got 16 million shares. Now, what was nice is that last week you were coming into that level with, let me see here, what was the volume? You were coming in there, not you, but the equity, with 19 million shares. So it was nice it was coming into it, and it closed above it. If you get it closed below that area here this week, this area is acting as a pretty good level of resistance, and says that it would pull back. And that's where on the daily I would use that gap up candle and somewhere below the session where it gapped up as your area for a stop on this, if it's a longer term holding that you have.
Yeah, it is longer term one. They haven't, so.
Yeah. Does that help you? But, not a bad-looking stock chart. You just, if they're holding for the long term, it looks to me like it's getting ready to take a break here and then just move back down to the bottom of that monthly channel line, and there would be nothing wrong with it doing it. It's just a matter of experiencing some pain. But that way, at least if you go back and you realize that it's been in that channel all the way back since the early part of 2009, if you expect it, you're not going to be unhappy if it travels back into the $32 price range or so.
Yeah, no, they won't be unhappy with that. So
okay.
But the trend just seems to be higher here.
It is. It absolutely is. It keeps crawling higher. So thanks so much. Hey, Bill, thanks for calling. Have a great day. Hey, folks, stay tuned. You got Basil Chapman coming up from 11 to 12. Not sure if Basil's doing a double header. 1 to 2, Daryl Martin, David White. 2 to 3, Ken Shreve. 3 to 4, the Tom O'Brien Show from 4 to 6. Have a magnificent Monday, folks. I look forward to seeing you in the morning.